referrals have been a huge source of growth for us. Obviously, we're still a small business. We need to find other repeatable areas for growth. And that's why Outbound is an increasingly new kind of effort that we're starting this year. And of course, our conferences, there's a plethora of other avenues for growth that you can do, but like nothing best than a happy customer telling another customer to check us out. Those are the easiest implementations because trust creates trust, right? And that in itself is one of the most magical flywheels in outbound and sorry, in go-to-market.
Every SaaS company plays for high stakes, but what does it take to dominate the market right now? Welcome to Paris Talks Marketing, the podcast where we dive deep into the latest trends and strategies in SaaS marketing that are really working today. I'm your host, Paris, and our guests are SaaS CMOs, founders, and specialists, and we discuss one trendy topic in the industry per episode. Ready to unlock the true power of marketing strategy? In this theme, we'll explore the world of cutting-edge marketing strategies and tactics that are shaking up the SaaS industry. We'll share insights on testing new tactics and uncover the latest developments from digital landscape giants like Google, Facebook, and LinkedIn. We'll also explore how AI is revolutionizing the digital landscape and transforming marketing tactics. So grab your headphones and get ready for a marketing strategy masterclass with Paris Talks Marketing. Hi, everyone. Welcome back to another episode of Paris Talks Marketing. Today, my guest is Andres Klaric. Andres is the co-founder and co-CEO of Fuse, which is a next-generation loan origination system that simplifies lending for financial institutions through self-serve customization, a low-code API builder, and a personalized agent portal. Over the last decade, Andres worked on Wall Street, investing in tech and business services. And this gave him an acute awareness of the issues slowing down lenders from achieving their highest potential, ultimately leading him to start Fuse with his co-founder, Marc Escapa. So, Andres, welcome to the show.
Hey, Paris, thanks for having me here.
I think one of the most interesting things that I have taken from your bio immediately is that you are a banker coming from the financial institution turned entrepreneur, turned SaaS entrepreneur. And that's a very rare story as far as I can see. Tell me a little bit more about that. At what point in your career did you decide it's time to break out of this corporate world and to start something and fix a problem? What was that point of inflection for you?
I think there were a number of folks along the way that kind of show you that it's possible. I would say being the son of immigrants to the US, definitionally, you kind of understand that component of taking the plunge, going to seek better opportunities. And once those opportunities come, you hear about like other folks that perhaps like they get to a point and they kind of go for that next step. I would say in my circle of friends, as far as entrepreneurs go, I have a very close friend from college that kind of started probably like 6-7 years before myself. And he always encouraged me, he told me, you should take the plunge, you should take the plunge. And I do remember speaking with some other folks, right? And people that were older than myself, like telling me, hey, like, if you're going to swing for the fences, do it before you have kids or do it before you're mid-40s. There is this window of opportunity to taking risks and just don't let it pass, right? The reality is that the corporate jobs are definitionally always going to be there, but the opportunity to kind of like devote an unreasonable amount of time to something else that is high risk, high reward, it's going to come for very few times in your life. So I felt I did not want to do the entrepreneurial route very early on in my career. I had responsibilities, right? Like student loans, things like that. I felt given my personality, I do want to be at a level of financial comfort that enables me to like at least have a cushion, just make sure that you have margin of safety. And when I got to a point at which that margin of safety felt like something that, hey, I can cut costs. I'm not going to go bankrupt. And I can actually really go take a risk and spend time on betting on myself. I went for it, right? Like what is margin of safety? Every person will have a distinct level of what they consider margin of safety. It's either multiple years of living at the same lifestyle or being able to just be on ramen in an apartment with 3 roommates. Everyone has a different level of what that margin of safety constitutes, right? And once you have an answer for that, I think it's time to go for it. And coming from banking, I felt pretty comfortable around the hours that this was going to take, the level of effort. Obviously, like the biggest difficulty of transitioning from a very macro high level job as an investing job is the low appreciation you have of like the nitty gritty of operating a company, right? When you're an investor, you always think, oh, why this management doesn't figure this out? It seems so easy. We brought the consultants and the consultants told us to do this. And then you realize it's far more difficult. At the end of the day, the market is not a model. The market you have already built up, it's a bunch of humans making decisions. Like humans, although rational, they're not like immediately rational, right? Or like not necessarily going to be rational. They do not have perfect information. They have information, and based on that information, they make decisions. But it's your duty as a founder or someone in the marketplace to actually inform that particular consumer or decision maker. So the difficulty of operating and being an investor, that gap is something that you close as you kind of start operating. And after taking the plunge, I've come to appreciate way more the sheer difficulties that operating a company bring relative to what I used to think when I was just sitting on a desk checking numbers and reading reports.
Yeah. Well, it sounds like that being an entrepreneur has humbled you compared to your past investment banker life.
I came into this world of entrepreneurship with eyes wide open. That was not going to be fancy, right? And being an entrepreneur is not just. I think that most of the day you're actually doing pretty unfancy things, right? Like you need to really come to the realization that nothing is beneath you. You need to be able to roll up your sleeves. Of course, like down the road, you need to start delegating and not be a micromanager there because you cannot elevate yourself. But in essence, it is a humbling experience, but it's the most personal growth I've achieved, I think, in my entire career. But I do think I would have not have that perspective on how great of an experience is to start a business had I not gone through the other path, because the other path of being a banker and investor really gave me a toolkit that it made a lot of portions of what I do today much easier. A lot of
Mhm.
founders don't have a financial toolkit, right? Like they have a very good sense of marketing and very acute sense of product or technical stuff, but good luck presenting a financial plan or not running the business to the ground because they couldn't really figure out how much they were spending and things like that. So I have that extra toolkit that I think really, really helps us have that peace of mind on like when we're thinking about investing, hiring people, just financial planning for the business that like my co-founder and I are able to have that peace of mind of like, hey, we can operate, we can afford to do this.
And tell me about your co-founder, Marc Escapa. Does he complement you with other skills that are not as much finance related?
I do think that the key thing is to share with your co-founder our values and the vision and like the ambition to achieve great things. But as far as like talent goes, the least overlapping, the best, because that means that like you can
Mhm.
actually cover more areas of the business with people and split equity with folks that are completely specialized in something. And there's the decisions and everything like are completely delegated to them, right? Like, so for example, all things finance, all things legal, all things sales kind of fall in my lap. And for him, all things like tech. And of course, like we both kind of present to each other, hey, this is how I'm thinking about doing this sales outreach, or this is how I'm thinking about product, this is how I'm thinking about staffing our tech solutions team. And we kind of have to present to each other and convince the other that that's the right path and explain it in a way that
Mhm.
the other can understand, despite, let's say, me not being technical or him not being like a financial person, although he understands that quite well. I think that like it has helped a ton not having too much of an overlap in terms of the things that we bring into the table.
Yeah. So what you're saying is, and I would totally agree with this, is that you need to have a lot of overlap on values. You need to have shared values. But when it comes to the actual set of skills, if it's you and a co-founder, best not to overlap too much because then that's more of redundancy. And when there's no overlap in skills, then you can each focus on your core area of expertise. It sounds like you two have figured that out quite well.
Yeah, I mean, it's also luck, right? I'm sure the people disagree, and they were like, "Hey, it's good to have people that are can actually challenge." And I think that that also happens, but it has served us well as an organization.
Yeah. Let's talk about Fuse now, the product. And loan origination is something that banks and lending institutions have been doing for, I don't know, 100 years plus since the dawn of time, since the dawn of lending. So let's just start with the basics. What is loan origination? What does that process look like? And then what is broken about it, according to you, that you're trying to fix?
I mean, if we're going to talk about since the dawn of time, people have needed capital to finance projects or whatever it is that they need to do it since the dawn of time, right? Since like the concept of credit was created, it's even the Bible, right? Or like in other books. When you think about it, someone has a need, they need to find someone that is going to meet that capital need. And there's a process for the person that's going to meet that capital need to underwrite, meaning check if the person applying for the loan is creditworthy and decide what type of evidence they need to be approved and collect that evidence, confirm it's correct, and then fund those loans and give it to the person. So that's kind of the process of origination, right? Fast forward to like 2024, the process of underwriting, sometimes you're not even thinking about it. You're looking on ESPN or whatever website and you're thinking, hey, this credit card looks pretty enticing. It has very good, nice points. I would like to get this credit card so I can run my expenses every month through it. But the process of applying for that credit card involves the same exact process that has been taking for years, right? In essence, you need to say who you are, how much money do you make, are you credit worthy, do you have a job? We need to confirm how much your income is. We need to confirm how long you've been at the job. And based on that, we will give you an offer. And that offer needs to be attractive enough for you to say yes, or flexible enough for you to say yes. And if you say yes, you get a loan or you get a credit card, you get another loan and all that. And that's kind of what Fuse does. Is this process that used to be much more like archaic and rudimentary paper based. It's now, it can be done in seconds, and also minimizing keystroke, at least in the context of the US, with as little as just having your phone number, like in a few elements that they recognize you as your social security number, things like that. We can get your information. You get consent. You get a soft pull a soft pull essentially means not checking your credit will have any implications in the score. Depending on if your audience is in the US, they probably understand what the score is in your credit, but like the higher your score, the better the credit offers and cheaper access to credit you're going to have. And you get that approval and you decide what type of loan you have. And what has happened up until this point is that, yes, a lot of what I described exists as software. The only thing is that software is pretty difficult to program. So for the banks, credit unions, finance companies that kind of have this pieces of software within the credit for the tech stack, they need to build connectivity. Building that kind of connectivity is very expensive. They need to set rules and workflows and underwriting and criteria how they approve someone. And that process can be super cumbersome and very expensive for them to set. And last but not least, although the end goal is maximum automation, sometimes like you still need to bring a human in the loop to check, hey, you sent this income statement or your pay stubs and they're kind of murky. I cannot really read it. Can you please resend it? Or just the machines are not going to be able, the machines are not perfect yet. So in order to kind of do that final double check, sometimes you have a human. What you need to ensure is that person that is the last line of defense to making sure that everything is there for the creditor has the tools that are just uniquely customized for their need, right? Like if you're pressing 10 buttons per day at work, that your screen should just be 10 buttons. We want to make it as easy as possible for that person to be successful. You don't want them to be like confused by other information that does not contribute at all to the success of their day-to-day role.
So the primary user is a loan officer in a bank?
There's multiple components, like the loan officer, the underwriting officers, the funding officers, even management, right? That needs to change criteria. It needs to understand how many loans that we originate every month, how much it costs us to underwrite those loans, what type of data sources that we're using are the best position for us to increase conversion. Everyone in the bank or the credit union, the finance company can actually touch this. But yeah, on a day-to-day basis, the power users are loan officers.
Okay. Ultimately, your software, is it replacing some legacy loan origination software, or is it in some cases replacing spreadsheets or other
Yeah,
systems?
in general, there's like legacy systems that we're replacing. The biggest issues that they have are like what I mentioned around connectivity, around doing low code, no code to actually improve the experience for the user. And of course, like the dashboards. The dashboards are a fundamental thing that enable the power users that I mentioned, like the loan officers, to really be much more efficient and continuously automate. Because one of the biggest pain points for our partners is the fact that, let's say they switch from company A to company B. At company A, they were at 20% automation. Company B delivers 47% automation. But the problem is like those automation percentages are pretty static. Usually they need to start an entire professional services engagement to take them to 47 to 70. And what we tell our partners and what we do it is, hey, like you actually can get it, you can toggle how much automation you want. We give you recommendation, we give you insights, we tell you, hey, you're taking too much on this part of the funnel. If you automate these steps, you're gonna reach this level of automation or like gonna take less time. So like they can continuously see the areas of opportunity they have so that automation is a continuous improvement process versus just a static point in time.
Okay. Let's talk about the go to market here. This sounds so far like this is a highly consultative sales approach where for each prospect, I'm guessing you're going into enterprise or maybe mid market to enterprise. So you're going to have all sorts of different scenarios of tech stack and processes. So this is not a simple plug and play, easy to replace, easy switching costs kind of scenario. You have to get in and really understand their technology and the level of inefficiency in their processes, and then walk them through how you can improve. What are the challenges around that? Am I correct in that assumption? And can you walk me through the go-to-market sales motion?
Yeah, it is absolutely an enterprise sales. People, although they feel the pain points, it's not that there are like a ton of options in the market and that people are thinking all the time, I need to run a proposal to change this. The competitors in the space are entrenched. Their biggest barrier to entry is the duration of their contracts. So I think that for us, from a go-to-market standpoint, the key thing is understanding where are those contracts up for renewal and having a champion within the organization to really do that. The good thing is that there's thousands, if not like over 15,000 financial institutions in the US, they can be fit to use this, right? Even if they're like in 5-year contracts, if you divide 15,000 times 5, you still have 3,000 of these organizations every year looking for this type of technology. And this is a technology that is a very, since it's enterprise, you would imagine it comes at a point that there's a lot of people involved, but it's a process of creating value, right? It's not just saying, look at this cool widget that it has. People don't care about widgets. People care about outcomes. How much time am I going to save? How much I'm going to save on data sources? How much I'm going to save in cost? And like, how much is my conversion, meaning my revenue opportunity going to increase by virtue of switching to you? So a value-based approach is fundamental here. So that's the first part of the funnel, right? Like identifying who is renewing. Second is what type of value you're creating for this constituency. And the way that you illustrate value is understanding quite well the parts of the tech stack that might be at pain points. The good thing about this space is that there are not that many incumbents. The pain points that like Bank A has are usually very similar to what other financial institution has, right? It kind of revolves around the 3 pillars that I mentioned earlier in terms of what the product is. So we understand kind of acutely what are at a macro level, what are the pain points. Yeah, you're right. The nitty gritty components of the solution are going to be different. But the good thing is that in the US, from a regulatory standpoint, you need to be able to explain why is it you reject people. So like the secret sauce of underwriting needs to be explainable. You cannot use like obscure sources to underwrite. You need to be able to explain that person. And the things that you utilize to be able to approve someone need to be approved by FICRA. So you cannot use just, I don't know, like the Zodiac to explain an underwriting decision. So yes, each lender is going to have their own nuances, but those nuances, they're going to be a limited amount of scope on how much it changes. And what we pride ourselves on is like in the flexibility of our software so that they can change it themselves. But from a go-to-market motion, the general areas of how you help them fix it are quite overlapping, I would say.
Who's doing sales other than you?
We have an outbound team. We have partnerships that does that. But in general, referrals have been huge for us. We're operating in a market that is significantly underserved, I would say, in terms of newcomers coming in and actually solving the issues that exist for the space. So we're very happy about the fact that referrals have been a huge source of growth for us. Obviously, we're still a small business. We need to find other repeatable areas for growth. And that's why Outbound is an increasingly new kind of effort that we're starting this year. And of course, our conferences, there's a plethora of other avenues for growth that you can do, but like nothing best than a happy customer telling another customer to check us out. Those are the easiest implementations because trust creates trust, right? And that in itself is one of the most magical flywheels in outbound and sorry, in go to market.
Yeah. I totally agree that there's nothing sweeter than referrals, and the referrals are typically deals that have the shortest sales cycles, the highest win rates, and probably those customers also have the longest retention, highest lifetime value. Although in my experience also, there's a limit to growth that you can achieve solely through referrals. And it sounds like you all have realized that and are now getting into outbound. I want to learn more about outbound. Or do you have sales development reps that are prospecting? Are they emailing and calling out on prospects?
They do a phenomenal job. We just started outbound, but it's been a pretty fruitful experience for us. And it's a combination of calls, email, LinkedIn. We use all the avenues. And I do think that like for enterprise sales, the playbooks are pretty well known, right? So it's really having a solid playbook, having good data, and of course, having very good people on the front lines spreading the gospel of things.
Now, a quick word from our sponsor. The Paris Talks Marketing Show is affiliated with Hop Online, a performance marketing agency focused on high growth SaaS and other recurring revenue based companies. If you like the flow of this conversation, you may want to consider jumping on a discovery call with someone at Hop Online. A discovery call is similar to my podcast interviews in a lot of ways. We'll get to know your business goals, competitive landscape, and marketing needs. And you'll almost certainly come away with some new ideas for how to accelerate your customer and revenue growth. If you're interested, go to hop.online, that's hop, H-O-P .online, and book a discovery call with one of our strategists today. Now, back to the episode. One method of targeting institutions is their renewal date on their legacy software systems. How do you find that out? How do you know if the TAM, total addressable market, is 15,000 or so? If the typical contract is an annual contract and 3,000 of those are up for renewal?
I would just give you like an estimate. When you think about it, just the amount of opportunity that exists every year, right? Like even in the worst case scenario, you have like 2 to 3,000 folks every year actually looking for this.
They're in market, yeah. And in your experience and with the SDR team, what portion of people whose contracts are expiring or coming into renewal are aware that they're ready to make a change versus how many people renew this really year after year without even acknowledging any kind of pain point?
They're not going to consider an alternative if there are no alternatives, right? So the first duty there for ourselves is being an alternative and create awareness around ourselves. That is like a long-term investment on our end, right? You need to make sure that you're knocking off doors that you created, that like you go to the same kind of conferences, you make your name heard, or you're part of the statewide organizations where they actually pay attention. You go to webinars. You need to create value for this team before you try to get any sell out of them. It takes time, but as I mentioned, a lot of these places have been neglected in terms of like new technology. These are systems that have not changed in 20 years. When you look at this piece of software, it looks like the 90s, right? I mean, I grew up in the 90s, but software should not resemble Yahoo in 1999, right? Like, I think that resonates with our customers. What resonates with our customers is like, hey, this is a self-serve tool. We are an actual tech shop. We're not a consulting shop. Of course, we have a view on how you should set up from the get-go, but you can change it as much as possible. You're never going to be limited by, hey, this is out of the gates, never going to be change it, goodbye. I'll see you in 3 years when this is up for renewal. It's not like that. They are able to really adapt to a changing credit environment, meaning interest rates, risk, cost of capital, things that like today they usually need to hire or bring in engineers to actually change things. They can actually do it themselves and be much more proactive instead of being reactive in the marketplace. And the line of defense, meaning the power users that are actually using this every day, they appreciate that you've created a time machine for them. They're getting back time, right? They're doing things much faster in a way that doesn't create burnout, and that it ultimately turns them into much more efficient workers, and that allows the leadership to actually scale without necessarily having to bring in more people.
So with Outbound, any particular tech stack that you're using for these nurture sequences?
There's a number of them. There's from Outreach, LinkedIn, there's Salesloft. It really comes down to the type of outbound strategy you want to hear. Where are you focusing your efforts, right? you're focusing your efforts on calling, you will need a different tech stack. If you're just CRM emails, different tech stack. Between like HubSpot and a number of other tools, I think that for a scrappy startup team, those will kind of suffice, right? And if you're at an even smaller stage than we are, I mean, there are so many AI tools and things like that that you can use at scale to find product market fit. Unlike we were like even a year ago that those tools did not exist, right? I think Sam Altman mentioned this. It's probably the best time in history to be a founder. Of course, it's not like the capital markets are as flexible as they were 2, 3 years ago. But I still think that I just think about tools, how easy it is to incorporate a team, to incorporate a legal entity, how easy it is to hire the teams overseas, how easy to communicate at a low cost via tools like Zoom. And there are a lot of elements that you can use that did not exist 5 years ago.
Yeah. And do the teams use any type of personalization techniques or any AI that would allow them to personalize those messages?
As long as there's no issues with personal information that is risky to put it on ChatGPT or things like that, I think that, yeah, absolutely, it's important. But like the research in itself, it's still human, right? Preparing for a conversation with Paris and understanding that Paris lives in Bulgaria and what took Paris to move there, all of that requires homework, right? And I think that in itself is still human based, but you can automate the process of sending that email, right? Being like, Paris, let's look at like specific things that yield higher open rates on an email. And it's like calling Paris, instead of saying, hi, Paris, you say, hello, Paris. I'm just making this up and say, how are things in Sofia? But maybe you're not in Sofia today. Maybe we looked on Instagram and you are in Athens. Without being creepy, I'm talking about just examples of how you can actually see that, oh, this person actually posted on LinkedIn that this week they are working out of New York. Maybe since we're in New York, we should have that detail of like, hey, well, we're in New York too. Let's have a meeting. So things like that, they still require humans, but kind of the process of the email itself, parts of the email will probably be less curated and more templated if needed. But in general, we make an effort to really get to know our prospects, especially in the very beginning. If you're in a sequence in which you're like email 50, then again, it's not that we send 50 emails, but let's say you're in email 50, you're probably going to send a much more standardized message rather than doing like the same level of research you will do at email 1.
But what about the third leg or the third channel that I always think about after referrals and partnerships? Number 1, outbound. Number 2, and number 3 is inbound. Where are you all with inbound marketing?
I mean, inbound is, you really need a good website. And I think our website, it's getting a facelift. We've been lucky that we've been able to get to the point where we are with what I would consider a website that it's at a nascent stage. And I think day one of launching the business, I was very happy with how it looked. I think that there's plenty of opportunity now, and you will see over the next 2-3 months that the website will look significantly prettier.
Yeah, I mean, I think it's clean. There's a request a demo button as the primary call to action. And then we're going to probably a classic booking. The Calendly widget, which is not too bad. So everything is going through demos. And then from a demo, you try to convert that to a opportunity, I suppose.
Yeah, it's a long process, right? But like usually a demo yields a little bit more of a, hey, let's bring in other parties that probably want to understand this. But you can see, right, like this is very different from the hero page in terms of the looks and things like that. We're in the process of making this far more applicable to like where we are as an organization. If anything, as an organization, we have room for improvement everywhere, but I just think like the easiest, the low hanging fruit is our website. So we took the task to make it look better this quarter.
Yeah, I tend to agree with you. One thing that I was kind of looking for and I would have expected is some kind of a cost savings calculator that you can play with. So you can go in and you can input some information about your current technology or your current process. And then it would say, if you transition to Fuse per loan officer per month, you could be saving 16 hours, which might translate to another 20 approved loans originated every month for that loan officer, something like that.
There are a lot of nuances, right? Because you need to understand the volume that they have, what type of tech stack to utilize, what type of course. So I would say the calculator will be hard to have something that it's very simple, like the same way you kind of calculate refinancing a loan or like getting a cheaper loan, there will be too many elements for that person. You might actually get them lost. And that's the problem with enterprise. Or like growth, you can actually have that and like show to that prosumer kind of how much time it's going to save. But in the enterprise, you hit the nail on the head earlier in the conversation. There's a consultative component to the process of evangelizing the customer, and it's really listening. And trust me, we've thought about how can you actually demo the platform, and it's the type of product that like usually the decision maker is not the user of the platform, so it's very important to convince constituencies differently. The decision maker makes that decision based on kind of efficiencies achieved, and the user has all the reasons why they want a better platform. So understanding both constituencies and making the case for each one of them, it's a different process.
Yeah. Do you all do any LinkedIn advertising or?
We don't.
LinkedIn?
I do have a presence on LinkedIn, and kind of goes to that deliberate process of actually creating value for the customer. Like it's not really me trying to talk about uses, but that kind of creating awareness. This is how we report back to the world what we're seeing as issues. And by virtue of creating that awareness, you ultimately become kind of a voice in the space. There are not that many people, trust me, speaking about loan origination.
Yeah. I went and researched the keywords around loan origination software. And in the US, it appears only about 3,000 searches are happening per month, which is still significant, I guess. The average cost per click here is about $10 or $11 per click. So that's expensive. Have you ever dabbled in paid search?
Not yet. Not yet. I think the SEO strategy is nascent, but it's really just creating content for us has been more important. I mean, there's definitely an opportunity on paid search. We've seen other channels being a little bit more efficient.
Yeah, I hear you. Because this tells me that we're given the TAM of 15,000 companies, and maybe in an enterprise, there could be at least dozens of relevant people, either the users or the decision makers, the managers who are in each of those companies. So you could have in the hundreds of thousands of actual people that you could be selling to. But for only 3,000 searches for a loan origination software, it doesn't show me that there's a high perception of a problem with loan origination software. So I guess that paid search, it's more about creating awareness and convincing people that they might have a problem that they don't even realize.
If anything, 3,000 seems a lot to me. I mean, if you think about it, right? Like there's like 3,000 people doing the quick math that I shared with you earlier, right? Like there's 3 to 4,000 per year. That's 12 times the fact that like you have 3,000 per month. That means like there's 36,000 people in the US searching this every year. So when you think about it, that's like more than 10 times what I thought just doing that quick math was. So I'm shocked that number is not lower, if anything.
Oh, okay. Yeah. For me, I'm surprised how small it is because I thought this was an established category, but with 3,000 searches a month, to me, it's a baby category in
Yeah,
SaaS.
well, this Lendtech, there's this core banking. There's a lot of components to it. Like some people tend to confuse LOSs. There's also the LOS, loan origination system, loan origination software, loan origination tech. I think as far as our acronyms, we have a long way to go. And reality is like all that an loan origination system is an orchestration layer.
Yeah. Gotcha. Really interesting. Well, this has been great. Andres, is there anything that I didn't ask you that you were hoping I would ask, or is there anything else that you can share that you feel would benefit our audience?
I had a blast. I love the quality of the questions and getting to know you. I hope the audience finds this useful. And if they reach out to me, I'm always open to like speak with founders or potential customers or people that just want to learn more. I tried my best to respond as soon as possible.
Great. Where can people find you online?
LinkedIn is the best channel. I check it quite frequently, so pretty excited about it.
All right. And that's Andres, just for those who are listening, Andres Klaric, which is his last name is Klaric.
Yeah.
So a little showing your Croatian roots there. Klaric.
Yeah.
Well, thanks very much, Andres, for being with me. I think I got enlightened on loan origination, but at a higher level, really, you've found a little corner in the software market where there's still too much presence of legacy systems. If a lot of people are still using stuff that looks like a 1990s software on their screens, it's ripe for disruption. And you spotted it and you're solving a problem. I think that's fantastic.
No, thank you, Paris. I'm grateful for the legacy systems because they open an opportunity for us.
Yeah, they sure do. Great. Well, I wish you all the best of luck with Fuse. I'm sure you all are on your way to some big wins. So I look forward to keeping in touch.
Thank you, Paris.
Thanks. Another great episode in the books. Hope you enjoyed it. If you want to get notified when future episodes drop, be sure to subscribe to Paris Talks Marketing on your favorite podcast player. And to learn more about our growth marketing agency, visit hop.online. That's hop, H-O-P.online. Have a great day.